Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
Date 01 and good evening, everybody. Welcome to, let's just hit this button first. All right, good evening, everybody. Welcome to DayTradeSPY.com's weekend review, intro to trading for Sunday, April the 26th. And my name is Hugh, folks. I am the presenter. And we're going to move this along here quickly. If you're new here, let us know in the questions box, all right? Let us know in the questions box. I don't want to keep you much more than 45 minutes to an hour or something like that. We'll get a little bit short. Beautiful day here in Western New York area. I kind of want to still enjoy the sunshine here if we can. So, but if you are new here, let me know, and then we'll certainly give you a shout out. And if you are new to trading, well, let us know that too, and then we'll give you a brief overview of what options are all about. Anyway, use the questions box. Let us know in the questions box again if you are new to options. You'll find a little icon on your Zoom dashboard. Click on that. I am the only one that sees that. So go ahead and say whatever you want. All right, tonight, here's what we're going to do. We're going to discuss the last week in review. Oh, wait a second. That went fast, real fast. Upcoming week, 2-minute tutorial. And you can answer your questions. And we get a little contest going here, as we do every week. It's not a skill testing contest. It's just really a chance kind of a contest, okay? And okay, so all right, that's what we're doing. Here's the standard disclaimer. I'll give you a couple seconds here to read this. I think you know what it's all about here. You're alone responsible for all your own trading, and past performance does not guarantee future results. Okay, let's see. What qualifies me to give you this presentation? Absolutely nothing. Folks, been a long time trader. Been publicly teaching this now. We're just about to start our 17th year. In early May, it's going to be 16 years that we've been doing this publicly, teaching people. Started by accident. When I started making some money, and people started noticing the course being teaching them, so that's what we did, right? And yeah, master some cool techniques. All right, trading from the trenches, short-term breakout trades. That's what I look for. All right, not looking for swing trades or position trades. I don't know where the market's going to be a week from now, a month from now, a year from now. These pundits that think they know, they don't. Nobody knows anything. Okay, but we do have a pretty good idea as to where the market's going to be today, and that's what we're all about: short-term breakout trades. And we enjoy teaching people. I had this question asked the other day: how come you're not just trading yourself, and why bother teaching? Well, that's a good question. It's because, kind of enjoy it, all right? I like it. It's kind of like my social life, and kind of sort of in some funny way gets me out of the house type of thing. But I really enjoy it. I like to see other people do well, all right? And remember, if you want what I have, you got to do what I do. So this went on for a long time, and then it was 2022 when Salem Communications, one of their sub companies, Eagle Financial Publications, took notice, and they bought us out. And then they hired us back, and then they brought on John Johnson, who was actually a litigation lawyer turned options trainer. He gave up his law practice to do this. Highly acclaimed in industry publications, he uses highly effective tools to determine his trades. His philosophy is very simple. Take what the market gives you, and his definition of success is doing what you want when you want. All right. So what we have here is convergence of two separate professional traders. Now, I have my set of indicators that I like to use, and John has his set of indicators that he likes to use. And when I say the stock's going to be going up in about 2 minutes here, and he says, I agree, I'm seeing the same thing, you might want to buy calls, right? Because that's what it's all about. So we have a saying here, very apropos here, when our indicators unite, our trades ignite. And it's pretty cool. And it's really cool when it happens. So we are actually onto something, folks. We actually have an excellent success rate. Excellent success rate. Okay, I think it was like 95 plus 98%, something like that in the trading room. All right, excuse me. So before I get too started, I want to just tell you about Spy on the Market. It's a newsletter that goes out every Thursday in your inbox. All you have to do to subscribe is go to our website, DayTradeSPY.com, leave us your email address, and you'll be on the list. You'll get our newsletter. It's a very cool newsletter. It's only about 700, not about, it is exactly 750 words. And it's just a kind of a nice 3-minute read. That's if you're really slow. Very light, relevant, and even entertaining. Again, all you have to do is subscribe. Is go to DayTradeSPY.com and subscribe there. Now, if you don't want to subscribe, you can just go to our website, DayTradeSPY.com, and up at the top left, you'll see the newsletter. Click on that, DayTradeSPY, Spy on the Market, and you'll see all the old archived newsletters right in there. This week's topic is going to be the Master Manipulator. The Master Manipulator. All right, so I am going to, what was I going to show you here? I think I want to show you something here. Let's see if it's over here somewhere. I think this is here. So let me just do something here. I want to do something. I'm going to add a new slide in here. This is just a new, okay, so a buddy of mine, actually, he did a favor for me. Actually, it wasn't a favor, it was just out of the blue. We were we were talking about artificial intelligence yesterday. He said, well, you can do anything. Yeah, he said, I'll write you a song. Took him about, I don't know, 30 seconds, maybe a minute. I'm just going to play it for you. Tell me what you think of this, folks. It just goes on for about maybe 20 seconds here. Listen to this. Oh, wait a second. I forgot to hit the volume up. Okay. Just listen, give this a listen and tell me in the questions box what you think. Should we include this in our intro or does it look like sound really, cheesy? Here, listen up.
Ooh, yeah. Got that sunshine in your soul, taking back all your control. Hear that easy money call. With you and John, you'll have it all. Day Trade Spy is on the air. Ooh, Day Trade Spy. Day Trade Spy is on the air.
Okay, tell me what you think, folks. And be honest, be honest. Okay, there's our first response. No. Okay. Any other responses? Anybody like it? Nobody likes it? Another no. Okay. No, skip it? No. Okay. You guys don't like that, huh? All right. Well, that's good to know. Anybody else? Come on, guys, gals. What do you think of that song? What do you think of that song? Sounds like a commercial. Okay. All right. That looks like we'll dump it. I'll probably play it in the trading room tomorrow, just for fun, kicks and giggles. All right, let's move along here, folks. There we are. This is what happened in the market here during the week. Let's go over this. That's actually pretty funny. I think I agree with you. Oh, we got a good one. We got one. He says yes. Okay. He says he thinks it's good. Okay, thanks for that, Ben. All right, Monday, SPY closed slightly lower as oil surged, went up over 5% in the geopolitical tensions between the US and Iran, ending the record-breaking streak. Ran up, came back down again here for Tuesday. Retail sales pushed markets higher in pre-market, but the delayed peace talks and crude rose over 3%. That was enough to drop SPY back down to its knees. It came down around just over 704, somewhere around 704 for our support. Excuse me. Then on Wednesday, we had strong corporate earnings from the techs, as well as a ceasefire extension that defied the geopolitical tensions and elevated oil prices, but pushed the SPY right back up again to 711. And then on Thursday, we had some bounce in pre-market, double bottom in pre-market, then it ran right up. Strong PMI reports initially pushed SPY higher, but then the S&P 500 slipped 0.4% following weak earnings in software. Tesla and Microsoft both dropped 4% each, sending SPY just down to the 702 mark before ramping it back up, closed just under 709. All that said, we reached a new record high on Friday, 714.47, driven by a massive surge in Intel. Sent SPY to 214.47 before pulling back to just under 714 to wrap up the day, wrap up the week. The winning streak of the tech sector continues. That's what happened in the week. Geopolitical tensions, price of oil, inflation, and on and on. Now, let's see what happens here from a seasonal standpoint. This is a seasonal chart, folks. You'll find that blue line, that's the current SPY price, and that red line is an average of the last 5 years' daily close. You can see that we're from here on out, we're going to be zigzagging, but pretty well up to about mid-June, dropping a little bit, and then continuing on through the summer into August. We'll see what happens here, but looking at the historical record of this thing, it dropped about 2 points over the last week, and historically we rose about 3 points the following week. And if I can just get the spelling right on this one here, it'd be even better. There we go, 3 points, there we go. All right, so that's kind of the way the seasonality of this thing works. If this conforms to the historical moves of the last 5 years, we should see a slight increase in SPY in the coming week. But of course, we didn't have a war in Iran last year, right? Does anybody ever remember the war in Ukraine? Is that still going on? Don't hear too much about that anymore, do we? Russia and Ukraine. What other wars are out there? I don't know. But anyway, China. Yeah, China's moving in on everything, right? Middle East ceasefire continues, folks, to hold up the Strait of Hormuz. Closure maintains elevated risk to global energy markets everywhere. Diplomacy continues, but clearer signs are needed for a resolution before we get some stability back in the markets. Despite higher energy costs, consumer spending remains positive, especially with the tax cut windfalls. It was tax day here the other day, and a lot of people got their refunds, and they're spending it. They're spending it. Continued strength, upgrades in techs, delivering upbeat earnings. Markets remain resilient, especially in the energy-sensitive sectors, and Trump extended a ceasefire in the Middle East, suggesting a desire for a diplomatic solution. We'll see how long that lasts for now. Tomorrow morning, that could all change, right? However, talks on a more permanent peace deal have stalled. Strait of Hormuz still remains closed, and I should fix the typo on that one too. I thought I had that one fixed. Yeah, okay. Yeah, let's do this one again. I like, there you go. Strait of Hormuz remains closed. Nobody's going through there. All right, here's the chart. Looks like we've got a V shape in the recovery of stocks. Once the war started here, we saw stocks tumble, right? The price of oil went up, but it looks like the market absorbed that pretty good. And we are now seeing moves back up. The Russell actually advanced the most here, mid to lower to mid stocks pushed up pretty good here. And the other markets, Nasdaq as well, they're back up to where we were before the war started. So things are pretty good here. Consensus S&P earnings estimates continue to factor in vigorous growth across most sectors, despite higher oil costs here. Now, Bloomberg Intelligence is saying that we have, they're expecting a 12% increase in earnings over the same period last year. And so far, it seems to be happening. Mostly in the IT sector, followed by energy. We're looking to see where that's going to take us. Materials, industrials, everything is going very positive here, straight across the board. Nothing is going into the negative here. Here's what happened last week. The S&P was up 0.6%, year-to-date 5.1%. Quite the change from a couple of weeks ago when we were actually in the negatives. So we're seeing a pretty good move back to the upside. Dow Jones year-to-date 2.9%, and the Nasdaq is up 7%. Excuse me. Of course, the Nasdaq has the Magnificent Seven stocks, right? Well, the big names are there. Collectively, they control about 35-40% of the capitalization of the S&P 500. So you can see there's a lot of movement there, a lot of volatility. They're mostly overpriced anyway, but whenever there's any movement at all, you'll see it in the Mag 7 stocks first. That's why the Nasdaq is up 7%. This week, they ran up 1.5%, as a matter of fact, and the Dow actually fell 0.4%. All right, excuse me, looking at the week ahead, Monday, low, no news day, not too much to report there. Tuesday, we have a consumer confidence report, conference board, consumer confidence, also the Richmond Manufacturing Index. But brace yourself because Wednesday, hang on to your hats, folks. That's when you get the Fed Reserve rate announcement, earnings from Google, Microsoft, Amazon, and Meta. And again, another typo. What is this here? What is going on here? Okay, let's get this right. Okay, and and that's gonna be a very exciting day, Wednesday. A lot of volatility on Wednesday. And now the Fed Reserve announcement, I think it's 99.5%. Last I saw, they expect the markets to remain, not the markets, the interest rates to remain the same, and 0.5% expected to increase a quarter point. So we'll see what happens. Wouldn't surprise me if well, I think they're going to keep it the same. That's just my opinion. Thursday, unemployment claims, personal consumption expenditures, advanced gross domestic product, and Chicago PMI. And then on Friday, things soften up a little bit with the Institute for Supply Management Manufacturing PMI report. Okay, how does this affect volatility? Well, I'll tell you. Pretty low on Monday, high on Tuesday, Wednesday, and Thursday, and medium on Friday. That's our assessment. And of course, whenever President Trump speaks, expect elevated volatility during those times too. Okay. So yeah, I mean that's kind of where it's going now. Okay, I see some questions coming in here. Still talking about the song. You guys don't like that song. You want to play it again? I'll tell you what, I'll play it again here. And see if you like it. Maybe it sounds better the second time. What do you think, folks? Hang on. Let's see what it sounds like here the second.
Ooh, yeah. Got that sunshine in your soul, taking back all your control. Hear that easy money call. With Hugh and John, you'll have it all. Day Trade Spy is on the air. Ooh, Day Trade Spy. Day Trade Spy is on the air.
Okay, here's a comment here. Not quite the sound of Philadelphia. Frank C. says, I like it. Upbeat. All about Day Trade Spy. Okay, what's the song for? I missed what you said. No, somebody just sounds like from the 70s. Yeah, it's okay. I mean, he says, okay. Well, you know what? Maybe we'll play it every 10 minutes and I'll see how fast you get sick of it. I'm just kidding about that. Rainy, we're going to play it tomorrow so you can get all your shots ready. All right, how's that? All right. Yeah, it's kind of I don't know. Anyway, all right. That's what volatility is going to be all about. Let's take a look and see what else is going on here. 2-minute tutorial. Oh my gosh, we are so running ahead of ourselves here. 2-minute tutorial. Yeah, today might be actually an early day, right? So I don't know. There's something supposed to go on here tonight. I'm not really sure. I think it's just a lot of people hanging around here. We're down at the beach here in our beach house. A lot of people are coming in for the beach. So anyway, folks, 2-minute tutorial. Let's talk about this. Let's talk about this here. Critical market on open. There are certain times of the day when it's I call them the critical times. These are the times when things make a big difference. So what does that mean? I'll tell you what it means. Right around the market open, 9:30 Eastern time, there's factors that are going to affect the price right at the open. Headline news, right? Used to be mostly economic news, but headline news really takes front and center right now. There's a comment there: president being shot at. Is that going to be? Is that going to move the markets? Probably not. That's not going to move the markets. What moves the markets is any news concerning oil, Strait of Hormuz, the war in Iran. Those kinds of things are anything that's going to affect the fundamentals, including the oil and the cost of living. Right, when oil goes up, cost of living goes up. Everything across the board. That's going to affect the markets. Right. So headline news is taking front and center now, and followed by economic news. When there's no war, it's always going to be economic news. Anything that's going to affect interest rates, and that's also part of the headline news too. If there's a shortage of oil coming through, that is going to create inflation, which is going to create higher interest rates, right, to combat inflation. That's the way it works. So these are the things you have to look for. Number 3, earnings reports. We have a whole slew of earnings reports, and this week I'll tell you what we have for earnings reports. Where did it go here? I actually had that up here, and let's take a look here. I like to look at there's a few good websites for that. I like to see NASDAQ earnings calendar coming up on. I'm just kind of going to go over the important ones because the ones that are not really that important, they're not going to move the markets too much. But tomorrow we've got Verizon, Public Storage, a bunch of other ones, but nothing that's going to move the needle. Tuesday, Visa, Coca-Cola, T-Mobile, Corning, Booking Holdings, S&P Global, Seagate. They're reporting. Wednesday's the big one. We've got Alphabet, which is Google, Microsoft, Amazon, Meta, AstraZeneca, AbbVie, KLA. Let's see, Banco. Wednesday's gonna be the biggest day here for earnings. Thursday we have Apple, Eli Lilly, MasterCard, Caterpillar, American Company, Amgen, ConocoPhillips, SanDisk, Western Digital, and Stryker. And on Friday we've got Berkshire Hathaway, Exxon, Chevron. These are the big ones. Colgate-Palmolive. And on Saturday, nothing. Okay, so that's it. So watch for really volatile market on Wednesday with four of the Magnificent Seven stocks reporting. Technicals. This is the big one. And I'm going to show you in a second here. Technicals, chart patterns, right? Support, resistance. These are all things that you have to actually really analyze right at the pre-market, so that when the market opens, you know what to expect. Possible pent-up demand or a sell-off right at that open. All right. So often happens you get this massive pent-up demand. So as soon as the market opens, the options market, right? People start buying, and the market goes up. That's the time to make your money. Go and make the kill. Don't keep waiting for something to happen, because when you finally get in, the move has already been made. All right. If you're looking to go to the upside, get right in right at the beginning, ride it up, and take it up. Yeah, I'm going to give you an example here. Number one, SPY closed at 708.44 the day prior. That's this line down here. Okay. That's good to know where the SPY closed, where the stock closed. That's where SPY closed. I've got this line. I think I'm going to thicken this up a little bit here. Maybe I can thicken this up so you can see it a little bit easier here. Wait, okay, there you go. It's a little bit easier, right? That's where SPY closed. Now, SPY has a tendency under normal times and conditions to gravitate towards the opening price at some point in time. Excuse me. So that's what happened. Number two, this is on Friday, Intel. Intel surged 24%. And of course, SPY rose accordingly. Of course, we got the report here early on, and SPY jumped up from about 709 all the way to 713 in a matter of like a couple of minutes. Take a look at that. Now, that's a good thing, because you know that it's going to hit some resistance and it's going to start coming back down again. It's going to be some profit taking. Some automated orders are going to hit. But these are the whales. They're all going to kick in right here, and they're going to send us back down again. So that's a good thing to see. Strong rise, resistance came in at 713, then it quickly dropped right there, just about as quick as it went up. We came down to test around that 710.25 area. We got a pre-market bounce within the range. There's a range right in here. All right, about 710, about 711.5, about a buck and a half. Hit that resistance up around 711.5, and then at the opening bell, left, we started to form a left inverse bend shoulders. There's that blue circle right there. That is the left shoulder. Of course, you don't know that until after the fact, right? But it came down, found some support there, 710. 710 bounced back up to about 710.5. Then we had the right shoulder form, came back down to about 709 and change, ran back up again to that resistance level right in here. Okay, I should probably draw that in actually. Let me see if I can. That resistance level. Oh yeah, here it is. That's what I call the neckline. Then we had the rally followed by the right shoulder. There it is right there. And then rally to break the neckline. There's that neckline I was going to draw on. There it is right there. So what do you do with this one? Well, I'll tell you. You get in right here. You play this to the upside right there as it's breaking the neckline. Ride this baby up and take it all the way up. Okay. Maybe we can draw something in here. Hang on a second here. Let's see if I can draw this shape here. Okay, how about this one here? Draw the arrow. Well, I have the arrow in there, right? Take it all the way up. Now, if you really want to get creative, right here where it came down, right here where it came down and found some, so after a big run up, the market always takes, or usually I shouldn't say always, never use superlatives, takes a bit of a break, right? Like it's running up some stairs. After a few floors, it's got to stop and just catch its breath. And then what happened? Well, guess what? We had another rally to the upside, another pretty quick rally back up to the upside. Take a look at this. Anybody ran with this one here, you could have made a fortune. About 711, 7.5, 711 and a half, all the way up to 713, 714. How much money do you think you could have made there on SPY options? A fortune, a fortune, all right? Okay, I am going to remove those drawings here. Okay, there we go. Get rid of this. And let's move on. So how did the options market look like? Well, I didn't analyze this, but you can see this is a chart of the options here. You can see this actually had some pretty amazing moves here, right? Multiple opportunities to earn scalp wins. We had a full $1 rally by 11 o'clock on the option itself. So let's see, you got in down here on 650, 660. $1 option on that move, you'd have made a nice little fortune on that. And of course, many opportunities all the way up here, up and down, as you can see. When the market came down right at the open, let me see if I can get a drawing in here. Okay, moved right down there. Another one up here. These are all small gains. Look at that. This would have been when the market ran up again here. The market came down, so that would have been on puts, all right. When going down here, you'd have made money on puts. But look at this. The market, as the market was going up, here's that big run up. You could have taken the site down from 650 all the way to 750. There's a dollar move on that. A dollar move divided by 650 is 15, 16% right there. And of course, all the way along the way here. So that's how important it is. And you're done before what, 11 o'clock, 10 o'clock? It's pretty impressive, I'll tell you. And this happens every day, folks. Just about every day you get moves like this. All right, let's move along here. All right, that's our 2-minute tutorial. Our 2026 goal. So where this originated was last year. We started in January, and our goal was to make $50,000 by the end of the year. Well, if I remember correctly, we did it by the middle of September. So this year, but rather than doing it that way, what we're doing is we are saying, okay, you know what? If you were to buy 5 contracts on all of those trades, each of those trades that we narrate in the trading room, this is what you're going to get, all right? Track all the trades in the trading room that we narrate, and as if you're only buying 5 contracts per trade, all trading room trades are recorded. This is where you would sit right now. Starting in early January, this is valid up until Friday afternoon. All those trades that we talked about that we had executed in the trading room, they are all recorded here. If you were to only have bought 5 contracts, you would be up $12,130, excluding commissions. That's not bad. I mean, that's not bad, especially in these volatile times. So what is this? Near the end of April. Let me see how many days we have here till the end of. That would have been 114 days, right? So according to this model, 12,130 divided by what is it? 114 times 365. According to this model, we should have about $40,000 by the end of the year. Okay. Personally, I think it's going to be up over 50. I think it's going to be up over 50. This has some pretty bad losses, but we've taken steps to mitigate the losses, so this shouldn't have that problem now. Okay. It's never too late to get involved in this either. So if you're not in the trading room, you might want to get it on the trading room and just pick it up, because I'm sure you're going to do very, very well. All right, let's talk about some of our programs. Now, I've got these QR codes right here in the bottom right. Okay, you can click on these, or you can wait until after the session here and just click on all of them. Okay, so Inner Circle. All right, so we've got several programs, really cool programs. The Inner Circle is actually the first service that we provided back in 2010. Started this with May 2010. And it started with people just saying, well, just show us what you're trading, and that's what we did. Every morning, so we have, what we do is we give you a morning market analysis. John writes this for the most part, and very comprehensive. very articulate as to what he's writing. You're going to get this in your inbox so that we do all the heavy lifting. You'll also get a follow-up report later in the day as to what we actually did. And you're also going to be invited to our Wednesday night interactive meetups. If you can't make it, not a problem. They are recorded for later review. Okay. And it's actually very good. It usually goes, I think it's going a little longer than an hour, but he'll answer all your questions. Bring your questions. John handles the Wednesday night, and it's very exciting. Okay, and he talks about things all the time. So I really think you're going to learn a lot from these things. Okay, the inner circle is really pretty cool. Very concise, informative. This is all you need in one report. And I'll tell you, we do the heavy lifting, so you don't have to. The price, believe it or not, is only $299 a year, which works out to less than $6 a week, which is less than a cup of coffee. I think it buys you a coffee and a bagel a week. Now, everybody should be in on the inner circle, even if you only use it once a week. Even if you use it once a week, you are going to more than get your value out of this. Okay, what it does, it saves you having to do all the heavy work, right? Go to all the websites, all the various news feeds, X accounts, Twitter accounts, whatever you want to call them now. All those things, what we do is we combine all that. We look at all that. We scour the internet for all the news and events that are going to shape the markets that day. Inner Circle, everybody should be on that, $299 a year. Next up, the DayTradeSPY Signal. This is where you're going to get 3 to 5 signals a week, algorithm-based. All right, so it's all sent to you automatically to your email and cell phone as a text. The point here is to buy it immediately and then put it up for sale right away for a 5% gain. Now, usually it sells, but if it doesn't, then sell it by 4 o'clock as the market closes. And you're not going to lose everything because these options have time with them and they should be good for the most part. Cost of this, $3.99 a quarter. If you buy the full year, $14.95. $14.95, but that's the best value, $14.95 or $3.99 a quarter. It's an alert system, and it only goes like in the mornings, so you don't have to wait. If you don't get it in the mornings, then you're not going to get it. Okay, it's just a morning trade. Again, algorithm based. Now we also have the pick of the day. Now this is where John and I sit down before the market opens, and we hammer out manually, excuse me, which way the market is going to go, and we send you a certain particular pick. Calls or puts sent to your inbox just after 9 o'clock Eastern time. Usually around 9 o'clock, 9:10, somewhere in there. Okay. By the way we trade, we buy and sell first. Okay, we buy in calls and puts first, and then we sell them. No naked positions, no spreads, nothing like that. Okay, straightforward calls and puts. All right, so if you are looking to buy at market open with the pick of the day. So what you do is this. If it's, say, a call option and market opens, take a look at your 1 minute chart. If it is green going to the upside, buy it right then and there. If the candle is red, negative going down, then wait until it turns back down. You see the pressure back to the upside, then get in. And of course, the converse is true. Now, what happens a lot of times is the market moves very quickly. So let's say the bid ask is, say, $3 and $3.25 or something. So it wouldn't be that, $3 and $3.05. So you put in your order for 305, then it comes back. Oh, it didn't take it because it's now 307. And then you go back and you put it in for 307. Oh, you didn't get it again. Now it's 310. Well, here's the trick. Jump the queue, and if you see $3 and 305, put your order in for 308 or 309 or 307. Go a little bit higher than the ask price. This puts you to the front of the line. You get in the front of the line, and you're going to get the option right away as it goes up. So it lands in your box that you got it, and then you ride it all the way up, and then put it up for sale for whatever you want, 320, 330, whatever, wherever it goes, right? And that's the trick on this. Same thing to the converse is true to the downside with puts. So buy at market open, immediately put up for sale for a 6% profit target. And again, if it's not sold by 4 o'clock Eastern, sell it at the market close. Very simple. Folks, this too is only $3.99 a quarter, or $14.95 for the year. It's really truly a deal. Now, let's talk about the trading room. This is really where it all happens. Hosted by yours truly and John. Again, we're 2 professional traders combined. We have over 45 years market participation. All right, this is not our first rodeo. Okay. We've seen them all. We've seen pretty well what the market throws at us. There's not much that we haven't seen. All right. Interactive, learn and earn, fully narrated, where our strategies come alive. I had a really nice email sent to me. Actually, it was a text. It wasn't even an email. It was a text in the questions box the other day. It said, even when the market goes against us, we have very calming voices so that we don't get excited, right? Sometimes the market's going to turn against you. Don't worry, don't panic. It'll be fine, right? A little bit of patience and discipline, it's going to be fine. That's the key, right? Interactive. So you can interact with us in the trading room just like you do here in the questions box. We'll answer your questions as soon as we can. And excuse me. And again, this is where strategies come in. We have different strategies. We have different strategies, and OMG is one. OMG stands for out of the morning gate. Essentially, where the first 5-minute candle closes outside of some support and resistance levels, that's the direction we're going. And that's been working very well too. And of course, you have other strategies too. Of course, you're going to see them all and trade with us live in the trading room. Every morning, 9:20 to 10:30 Eastern Time. That's every morning, 9:20 to 10:30 Eastern Time. It's also recorded for later review. Sometimes people, especially on the other side of the world, they can't see it, but they get the recording right away, and they learn and earn that way. Okay, folks, $24.95 for the year, or only $6.99 a quarter. This is actually your best value. So you want to know, oh, that's so much money. You say, no, it's actually not. $6.99 a quarter. Well, if I divide that by 3 months, you're talking about $233 a month. And that works out to about $53.80 a week, or roughly $10, $11 a day. Believe me, you're going to get a lot of value, a lot of value. You're going to have 2 professional traders in your back pocket, for over an hour at just about $10, $11 a day. Are you kidding me? We don't get out of bed for that, but because of the volume, right? That's why we're able to do it. Folks, this is where you need to be. And if you know what calls and puts are, perfect. Okay, you don't have to be an expert trader. I sometimes have people saying, oh, I don't know if I should join the trading room. I don't know how to trade. I say, well, do you know what calls and puts are? Oh, yeah. And I determine that they know a little bit, and that's fine. Get in the trading room. That's where you learn, right? That's what we do. We teach you. Nobody is left to themselves. Nobody's left behind, right? So it's really the best deal, and you're going to want to get in on that. So now here's the beauty of what we do, folks, and you're not going to believe this, but all of our programs offer a 30-day money-back guarantee. So come online, check it all out. If it's really not for you, you know what? Just give them a call, Eagle, and they'll say, you know what? It's not for me. I tried it, and I don't see myself doing it. Can I have my money back? And guess what? They'll give you your money back. I don't know anybody else who does that. So that's the best way to do it. All right, let's get to some questions, folks. Let's get to some questions. All right. JM made my first trade on Friday, closed out for about an hour after opening for a 6% gain. Thanks. But I noticed the price went up to where 28% return was possible. Any advice? Well, we like to get in and out of there early. We like to be done by about 10:30, so you can get on with the rest of your day. I mean, we like to make trading our slave, not us a slave to it. Now, some people like to stay later and whatever. They can trade, of course, as much as they want. I don't advise getting into trades in the afternoon, because if you're in a bad trade, that 4 o'clock bell comes up real fast, right? You don't want to be stuck in a bad trade, especially overnight. So we like to make our money in the morning, get in, get out. But if you're on a roll, right, after the trading room, just keep trading. I think you'll learn pretty well what to do and what we do. Just keep going at it. But I would say by noon, I'll tell you my own personal opinion on that and my own philosophies. I don't get into new trades after 12 noon. I wrap it up at that time. So now some people can go on. That's fine. It's whatever you want to do on that one. So don't look and see what you could have had. Just be thankful for what you did have. Okay. All right. When volume is low on SPYs, it's still higher than the Qs or others. I'm not sure, Philip. The Qs is another good one to trade. Higher volatility on those. You're going to see more movement on those. But whenever something goes bad, the Qs take the hit first. Okay. They're more volatile, so they will take the hit first. We like volatility, but there's a little, what do you want to call it? There's a little softening, smoothing out with SPY. All right, a little bit smoothing out. But if you're into, say, higher risk, and if you see it really going, go ahead and grab them on the cues. But we trade only SPY, one stock, one strategy, 1 hour a day. Okay. Steven says, oh, my ears hurt from the song. Okay, no problem. I think we pretty well canned that song. So anyway, let's see. Shameless marketing jingle. Oh, yes, it is. Very shameless. We're not going to use it. If a trade goes south, what is the stop loss percentage? We don't actually have that. I generally do not use stop losses like that. First of all, I want to make sure that I'm going in the right direction, but that's not to say I never take losses. So then what happens is I will look to possibly repair a trade. First of all, I got to tell you, I tend to buy plenty of time. So on Mondays and Tuesdays, I will buy this week's Friday's expiration. And then Wednesdays, Thursdays, Fridays, I'll buy the following week Friday's expiration. So I've got plenty of time, even if it turns against me. And I found that usually when it turns against me, it will hit some. So let's say I'm in calls. Let's say it turns against me. I'll generally find some level, it'll find some level of support, bounce up, bounce off resistance, double bottom, start pushing back up. And when it breaks the neckline, I will generally go in and repair the trade by buying more contracts to bring down my average cost base. And therefore, as it goes up, I can make money on the upside without breaking a sweat. That's been working very, very, very well for me. But at some point, you do, I suppose, have to cut your losses. Now, if I do hold overnight, and every now and then in a blue moon, I will hold overnight, believing that the market's going to turn around because of whatever reason that it went down. All depends on the situation and the conditions. I don't just automatically sell just because it's going against me. When I used to do that, I'd always end up losing on that. Okay, options have huge leverage. It's not uncommon to see an option turn on you, 20, 30, 40, 50% before it comes back into profit. You have to let it go through its gyrations. It's go through its motions. Okay. I know some people have, say, on a scalp, they might have a 25-cent stop loss, and that's understandable because if you're, say, making 15, 20, 25 cents, you'll want to kind of wrap it up because if it is going to turn against you, something's gone funny, right? Either you've misjudged where the stock is going to go, or something happened, even an outlier situation happened. So you should cut your losses there. So if you're scalping, you might want to consider a 25-cent stop. So if it does go down that deep, and if it looks like it's going to continue to go down, take the hit at 25 cents because you can always make that up later. And I think that's the key, right? You can always make it up later. I know it's tough to do stops, right? And especially like in a percentage and stuff, it's really hard to do with options. But I noticed that with SPY options, stops do not really work well with me on that, and I don't know anybody who does really well with stops. We usually find ourselves, especially if it's a very tight stop, we usually find ourselves in a very losing kind of situation when you use stops. Let the market go up and down, it'll take you out. One of the things you want to do is always buy time, as I mentioned earlier. You want to buy time. Time is your insurance in this game, all right? So you don't, just like you would never, drive a car off a car lot without insurance, you should really have time on your side with options, okay? I know the argument is, well, it costs so much money. Well, don't let that worry you. So you just simply buy fewer contracts. If you're going to spend, say, $2,000, you would just simply buy whatever it is, 7 or 8 contracts instead of maybe 10 or 15 that you may have bought if it's less. It doesn't matter because when you sell it, you're going to get the premium back anyway, right? So don't panic because they cost more money. If you're lured into cheap options, and I know there's a lot of cheap options there for 10, 20, 30 cents, there's a reason they are cheap, folks. There's a reason they are cheap. The reason is they are not worth anything or they are a very high risk. Okay, 0-day expiration will give you high risk trades. Now, if you are a seasoned trader, I know a lot of people do, they go for the 0 trade expirations and they do very well. But I don't advise that for the new person because there is high risk with that. When those 0-day expirations go south on you, they go south in a really big way. And let me tell you, they don't recover nearly as fast as they go down. All right. Even if the stock goes back up to the previous level where you got in with the option, you'll find the option price is nowhere near that. Okay. The stock would have to go up quite a bit higher to get up to the same option price. So you usually find yourself stuck like a deer in the headlights with those trades. You don't want to get down, you don't want to go down that path. If you are doing 0 day expirations, you really want to make sure the setup is there. It's done early in the day and it's done quick. Quick in, quick out. And by all means, don't be into that thing later in the day. Like, 11, 12 o'clock, that's it. Because you tend to lose a lot of premium time, theta loss, right? And theta goes up exponentially. That loss goes up exponentially as you get closer to expiration. So we might lose, I'm just throwing a number out there, where you might lose, say, 3 or 4 cents an hour at 9 or 10 o'clock, something like that, 11 o'clock. You're probably losing, 15, 20 cents at 1 or 2 in the afternoon. So you don't want to be in that situation. So not sure that answers your question, Daniel, but I would say, so for scalps, first of all, buy time. Don't do 0 day expiration, buy time. If it goes against you 25 cents, bail out of it, you'll make it up on the other end. Or simply watch it, make that determination later as the market unfolds. All right, what is the historical success rate for the pick of the day? I don't have the number handy here on that, Matt. I used to know that. I think it was around 88, 89%, something like that. We sometimes have, it sometimes kind of comes in waves. We'll have 2 or 3 bad trades, but then it turns, it goes back and it'll go for the longest time without a loser. It's been generally pretty good. But what I want you to say, okay, so we aim for a 6% profit target, and that's what we determine to be our success when it hits that 6% gain. But if the IV, all right, implied volatility, is low, that means you're not going to get as much of a move. So you might want to be happy with 4 or 5% rather than 6 or 7%, or even 3%. I know some people, they're happy with 3 or 4%. They're actually pretty happy with that. They say, I would rather get 3 or 4% 99% of the time than risk getting, 6%, maybe 80% or 85% of the time. They've sort of done the math. It's whatever they're comfortable with. But going by a 6% gain, I think we're battling around 88 and some 89%, something like that. Now I haven't seen in a while. It could change. The other thing with that is when we show a loss on that. So according to our bosses, they want us to close out the trade every day. All right. And we kind of argued that. So, well, some of these trades are better if they're left overnight because we can anticipate where it's going to go the next day. But they say, no. As day traders, you actually should close it at the end of the day so everybody knows. So what do? So even though personally we may be in the trade overnight because we believe it's going to go in our direction the next morning, and it usually does, we have to show at the end of the day what the trade would have been had we closed it out at the end of the day. So it may show a loss. But the reality is it may not have been, probably would not have been a loss. And those people in the trading room, they learn all that. They learn to see, well, what are the signs that I should hold on overnight or close it out? Okay, because every now and then you do get in a situation where something's going to happen, and let's say earnings season, some big name earnings going to report at the end of the day or early next day or something. And you just know this is going to be a really good time for artificial intelligence, and the market's going to go straight up, and they hold out overnight and they come with a massive winner. We had this the other day, so I can't remember. Somebody said they had what were the numbers? It was in the tens of thousands of dollars that they had as a winner in a trading room because they did hold it overnight, even though we had to report the loss at the end of the day that way. So, all right, yeah. I know there's a lot of stuff here, folks. A lot of stuff. All right, what's the time? My goodness, I tell you, we are ahead of ourselves. I like to be ahead of ourselves because I always it's so funny. Every week I say how I'm going to keep it down about an hour, and then I find myself an hour, 15, 20 minutes, right? And I think to myself, oh my gosh, I'm keeping you guys ransom here. Ransom. Any other questions? Okay. How long you been doing this for? Okay. I don't quite remember when I got into this, actually. I was working for an insurance company in internal audit, and I remember, I had some funny stories. I got time for them, don't I? I think it's got some time. And I remember, salaried employee, it was okay. I didn't think I was going to be doing that for the rest of my life, but it's okay. And We had a small department. Some of the people in the department, we were very close. We were very close to the department. We used to eat lunch together and everything all the time. We had some very close. We had Neil, Fred, Danielle, Dan, Jai, Angie, and what happened was we always go down for lunch. And I remember we used to get in this department these boiler room calls. We didn't know what they were, but somebody would call and say, "Shh, don't tell anybody. I heard of this one stock. I'm involved in the stock. It's going to go to the moon. You can buy it now. It's like, I don't know, $10 a share, whatever. And we're only going to we're only going to release so many shares. Are you in on this or not?" And of course, being naive and we don't know what's going on here. What, really? Yeah, yeah. How many shares can I put you down for? You know what? I don't know. Give me $1,000. Well, give me 10 shares. Okay. I get 10 shares. And unbeknownst to me at the time, um, other people got the calls too in our department. So maybe Dan got a call and he would be in for $2,000. And, and Neil would be in for 3,000. And then we're having lunch one day. And when the subject came up about this guy calling to sell us these shares on a particular stock. I forgot what it was called now. I don't even know what it was, some resource company or something. Sitting around the table, say, well, and people said, "Yeah, I got a call. I got a call. Oh, Fred, what do you get?" "Well, I got 5,000. Neil, you got 2,000. Dan, you got 3. I got 1. Angie, what'd you get?" "I got 4." And then the next day, uh, we're at lunch, and I see in the paper. Back in those days, you had these numbers come out in the paper all the time, right? And we'd see, well, look at this, the volume on this particular stock. It's like $14,000. Interesting. So if I traded 1, let's see, Dan did 2, Neil did 3, Fred did 4, Angie did 5, whatever. We see 14, $15,000, whatever it was. Well, wasn't this interesting? We traded amongst ourselves. We traded this amongst that's the volume. We traded amongst ourselves here. And this is crazy. And I remember I got out of that. I think I ramped it up to $12 a share, whatever it was. I just took my hits out of that. But what I learned from that was that there is money in this business. And I just got to figure it out. Now, we had no idea what options were at that time. I think when I went to university, it might have been a 1 day on options, but there was nothing like it was now. And we certainly didn't have the trading platforms we have now, and discount brokers, none of that stuff. But I kind of knew there's money in this field, in this finance field, right? And then eventually some friends and I, we kind of got talking about this. We started opening banking, accounts, and of course the online trading started to develop. So, let's get an online brokerage. Okay. And then you start looking at charts and looking at different things. So you learn. You take a long way home with it. You'll learn. And you know what? After a while, you just, you get to learn a few things. Now, I think I had a lot of beginner's luck. A friend of mine told me about Exxon. I had another friend tell me about Hershey. Every February the 6th at that time, Hershey went up for 2 weeks. So I remember I loaded up the truck on Hershey options one year. I think it was 2004 on that one. And what happened was, I think I bought about, I want to say $4,000 or $5,000, $6,000 worth of Hershey, and I doubled my money in a week. Then my friend told me about, I've got this cat walking in front of me here. That's her tail. And then my friend told me about Exxon and where he expected Exxon earnings to go. So I took my profits off Hershey, and hey, cat, get out of here. She's looking at my pitch on the side and looking at me. How is this guy on both sides here? And I've loaded up the truck on cheap Exxon options, 24 cents, hundreds of them. And then I watched Exxon go up. My friend Dave kept saying, "It's going higher, it's going higher." So I stayed with it. I cashed out with $250,000 profit in about 3 weeks with those 2 trades. And of course, I had a lot of fun with that one. But Never repeated that again for some reason, but that was a real tough one. But it was exciting. It's fun, and it worked out very well. But then I knew though that okay, there's definitely money in this business. Just got to figure out how to make it consistent, right? How to make it reliable. And yeah, and ever since then, that was 2004, 2005, something like that. And here it is, what's this, 20 years later? 20, 22 years later, we're still doing this. Um, and again, I was involved in the market before that, so I don't really know exactly when they started, but lots of experience. Now, John, too, same with him. He's been in the market for decades, and he was making more money trading than he was practicing law. Why do I need the stress? He says, why do I need the stress of dealing with everybody else's problems? He was very successful, mind you. He was in the oil and gas industry. But you can imagine he had some, and he'd been up against some pretty tough boys there and judges and stuff. But he enjoys trading so much. So we do this now because we really enjoy it and we really love to see other people do well. And we don't mind sharing this now, God willing, and we able. We're going to continue on, but we'll see what happens. And at some point, you might want to just pull back a little bit and just kind of relax that, you know. And I think there's two pillars to market success, two very key important things. One is making money, which a lot of people can do, but the other one is keeping it, which a lot of people cannot do. I have friends who did very, very well trading. They made a lot of money, a lot of money, but they could not keep it. Just as quick as they made it, they blew it all out. They blew it all out. One gentleman I was talking to yesterday, he said his wife has no idea how much he lost. He told her that that he lost a lot, but he wouldn't say how much. And he told me in private. He said, "I take it she's not online here. Let me just real quick to make sure I don't want to incriminate anybody." Okay, we should be good. We should be good. Yeah, he said he lost $1 million. $1 million trading. I said, how did you do that? He said, I don't know. I don't know. I got greedy. I just, when I lost, he said to me, when I lost and I want to make it up real quick. And I don't know what time span he took a hit on that, but it was really sad. Now he's also made a lot of money. So I told him, listen, you lost it, but you still got some left. Oh yeah, I lost some left. Well, you get back in, ramp it back up again. And wouldn't it be nice if you can tell your wife, guess what? I made all that money back and then some. So we're on track. I said, you're not the same trader you were back in the days when you lost it. Have you not learned something? Oh yeah. Well, you're not the same trader, right? Yeah. But anyway, it's a fun, very exciting business. We enjoy trading, but we also enjoy training people and teaching other people how to do it. And I got to tell you, there's no words to describe the feeling when somebody calls you or texts you or emails you and says, "Oh, this is so good." I used to be with other programs, but I cut all the other programs because you're the only one here. DayTradeSPY is the only program where you actually make money and keep it and really enjoying it. So, in fact, I had a wonderful email from one of our trading room subscribers to that effect yesterday, and I passed it along to the brass, and they loved it. They loved it. So, folks, it's 8:59 now Eastern time. I think we're pretty well had it all done. Oh, you know what? It's time for our. Oh yes, it is time for our contest. So put it up in the questions box. I want you to put in the questions box a number from 1 to 100. 1 to 100. And I want you to, and we're going to run the, where is it here? The random number generator. Random number generator. Here it is right here. Okay, let me just get this up in here. This is not the number, folks. Ignore that number. That is not the number. And what I'm going to do is the person closest to the number when I hit the button is going to win the ebook Triumphs and Tragedies. Okay, so I'm going to give you about 20 seconds to punch it up in the questions box, and you're going to, the winner, like I say, is going to get the ebook Triumphs and Tragedies. And let me see, about another 10 seconds here. Wow, look at all these people chiming in. This is not the number. Okay, 5, 4, 3, 2, 1. Okay, we are cutting it off right now. Abinash, he is the last person to chime in. Okay, no more. Okay, now we're gonna count down from 3, and I'm going to hit the button, and whatever the number is, that is going to be our random number. All right, 3, 2, 1. The number is 69. The person closest to 69 gets it. So let me go back to all these people on here. All right, Rainey 79. 76 for James. 73 for Robert. 70 for Charles. It looks like Charles B came in at 70. Charles B, he wins the ebook, Triumphs and Tragedies. Just want to make sure there's nobody else. Okay, yeah. All right. Congratulations, Charles. You win the ebook, Triumphs and Tragedies. I will have that in your inbox. There it is right there. I'll have that in your inbox shortly after the session. All right. Okay, folks. Oh, yes, I want to tell you something. Yeah, something else. Okay. I almost forgot about this. So we did a video back in March. Eagle did. John and I, we did a video. It promotes, I'll tell you, it promotes the pick of the day. But I really was very, very happy about the video. It actually turned out really, really well. It's kind of funny. And what I'm going to do is I put up the QR code here. So it gives you a chance here. When I play the song goes on for about 3 minutes. Take a picture of that and just take a look at the video. Let me know next week what you think of it. And it's pretty lengthy. You don't have to watch the whole thing, but it's pretty funny. It's pretty funny. So, all right, folks, with that, thank you all for joining us. It's really been a pleasure. We'll see you the next time. Oh, that's the wrong one. Here we go. Have a good night, everybody.
You really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have